The following is a presentation of TFNN. The Trader's Edge with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the February 25th terrific Tuesday, also known as Turnaround Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools, well, just simply the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's truly what it's all about. So let's go look at one of our tools. This is truly one of my favorite tools. Many of you have heard it before, and no reason to not hear it again. It's the tool that's called Become an Ant. Ants live by a four-part belief system, a success philosophy that I think everybody should live by. Why? Because belief number one, ants never quit. If an ant is headed somewhere and you try to stop it, it'll find another way. They'll climb over, they'll climb under, they'll climb around. You know you've done this. You know, as a kid, you used to put your finger down. Of course, maybe I'm speaking on behalf of me as a kid. You put your finger down, on the driveway, and the ants, they would find another way around. They keep looking for another way. Folks, never quit looking for another way to get to where it is you're supposed to go. Belief number two, ants think winter all summer long. And that's really important perspective because summer does not last forever, and therefore ants gather their winter food in the middle of summer. Hey, when it comes to your trading, it means have a plan, folks. Right? Have an exit strategy on both sides of the trade. Belief number three, ants think summer all winter long. Now, for all of you up in the Northeast and West who maybe have gotten a little bit too much snow out there, that's really important because during the winter, the ants remind themselves that this winter won't last long and they'll soon be out. In fact, on the first warm day, the ants come out, and if it gets cold again, well, they just dive back down into earth. But as soon as it warms up, they can't wait to get out. And belief number four, how much will an ant gather during the summer to prepare for winter, folks? All they possibly can. This is truly the way to live. And we can learn it all just by paying attention to an ant. Never give up. Always look ahead. Focus on what you want. Stay positive. And most importantly, do all you can do. Well, let's go check out the ants inside of the markets here right now. We've got Dow futures are flat. They're trading at 16,185. S&P futures down 1 point at 1845. NASDAQ up a point. So we got a flat market out here as we speak right now. Kind of flat, really, across the board. A little bit of a pullback here in silver. It's off 20 cents this morning. It's trading down at 21.84. Goldilocks back $2 at 13.35. Oh, we are seeing a crack here in crude. Down $1.16 right now, out at 101.67. Looks like I'll be doing some work here during the break. We got natural gas. That's down about 5 cents, out at 4.97. Our call-in number is 877-927-6648. Give us a call, folks. We would love to hear from you. Take your question, answer whatever we can. If we take a quick peek around the globe here, FTSE is trading off 45 points right now. DAX is down 30. Looks like it's all up to all the bulls here in the USA. The Nikkei was up 213 points last night, about 1.4%. The Hang Seng off 71 points, and the Shanghai down 2% last night, off 44 points. Let's begin the day by taking a look at, so I can't really take a look at where we left off. Well, I guess I could. We left off yesterday. We were looking at a number of charts. I believe it was the 120-minute charts. We were looking at the futures contracts. The breakout was occurring, I don't recall, 9:30. Well, let's look at it right here. We had this one nice wide-ranging bar coming in at 10 o'clock in the morning. This is the Dow futures, by the way, that we are looking at. We want to pay attention to the Dow futures here at the moment because it's the weak link out here. And so from weakness, we will find out whether there's more weakness to come or whether weakness is just simply going to move over this hurdle. And the hurdle now is that consolidation range. So the danger here is that the Dow has moved back into that consolidation. The consolidation range from somewhere right around the 16, we'll call it 16,200 because it's easier to do the addition and subtraction out here. So 16,200 at the high, at the low, 15,950 So that is, 15, 950, 16, what did I say? I can't even remember, 16, 200. So you got, about 250-point move. I think yesterday we were looking about 2.25. So two and a quarter to 250-point move out there. We certainly did not get that yesterday. We got up to the... what you would do is on the top of the breakout at the 16,200, you'd add 200 points. So you're looking at, about 16.4. Now, what did occur here yesterday, what we have is we've got some nice lines that have drawn. So you got the horizontal stuff going on. That's your consolidation box. That's the highlighted yellow area if you're watching us on TigerTV. If you're just listening on the radio, your mobile device at TFNN.mobi, I just gave you the coordinates there to be focused on and paying attention to. Price moves up into the time period. This 30-minute chart we're looking at forms this little doji-ish, looks like a doji shooting star type candle here at about 12:30 yesterday afternoon as it gets up to the high of 16,281. Of course, as it was doing that, it was also in the extreme over bought condition. It needed to work its way off. That's what it has done. Now, in working its way off, it actually moved back down into the consolidation range. What we can see here right now, you've seen a push into this 9:30 session here, or 9:14 right now. Got up to 16,191. 16,191 looks to be about the top, right around the top of that consolidation box. If this market is going to move higher, you're going to need to see a break above that area. When you get back inside a consolidation, the danger is that you can go back and you can test the bottom of it. Now, there's also a little bit of a rising price channel. Again, this is a 30-minute chart for the Dow futures that we are paying attention to at the moment. Nice little rising price channel coming off of the lows here at the bottom of this consolidation that took place at about 3 o'clock in the morning. That is on February the 20th. So, quite frankly, so long as that line holds, then that gives some promise for the bulls to the upside. If, in fact, that line fails, well, then the bears will get a little bit of energy today, and that ought to push price all the way down to the bottom of the consolidation pattern. That's at 15,950. So, in my opinion, the lines are drawn in the sand. Now, if we take a look at retracement levels, we ought to do that. That means here we would go from the most recent swing point low, and that's at 16,050. That came in at 12:30. That was yesterday morning, December 24th, all the way up December 24th, February 24th. What am I talking about? If we go up to the high, that came in at 12:30. What we'll also see is 16,138 is the 0.618 retracement. Basically, the Dow futures have gotten down there, close to it. 16,150 has been the inter-session low thus far. That took place at 6:30 here this morning. But the key is going to be this top of this consolidation. In fact, the markets will move much higher. In fact, you could be looking at an A to B equals CD to the upside if, in fact, the Dow can get back above the consolidation box. What would that A to B equals CD pattern look like? It could look something just like this. That would go ahead and take you up. Well, take you up into the 16,393-ish range out there. So what did we say? We had 16,200. That were about 16,200 a 250-point move. So 16,450. Yeah, so 16,393. That is not out of the question at all. But it does have the top of this rising price channel here that it's going to have to contend with. But the first contention, I'm going to go ahead and delete the A to B equals CD pattern. We'll take things one moment at a time. Looks like I might have just missed a little bit on that retracement level here. Let me grab the, let me give you the exact number. So that 0.618 retracement was 16,131. So far, all we've seen here is a retracement down to about the 16,150. So that is on the Dow. We'll be focused on the Dow futures for sure, especially during the first half hour of the market open. Now, if we go take a look at strength, we looked at weakness. The strength out here happens to be the NASDAQ futures. NASDAQ has also been trading in a sideways consolidation. Those consolidations, you want to spot them as soon as you possibly can because any trend-based system is basically going to fail in a consolidation pattern, unless it's a large trend, much like we've had inside the markets, the actual stock markets. We're looking at an intraday chart as we speak here right now, and very intraday because it's a 30-minute chart. In the meanwhile, the bottom of the consolidation box here, for the NASDAQ, last time we were down there was about 8 o'clock in the morning or so. That was on December. Boy, I want to say December, don't I? February 20th out here, 36.38 and a little bit of change. The top of the consolidation is the price level of about 36.84 out there. So you do the math. That is your difference. That is your consolidation. We saw price move into a price level here, broke through the consolidation, nice wide-ranging bar. It, too, dipped back inside the consolidation box here at 6 o'clock. Well, it actually broke into it at about 4 o'clock this morning. But if we take a look at what the actual move here has been, we got a couple different retracements that I want to focus on for you. Well, first thing we're going to do is take a look at off of the rising price channel. We're going down to that midnight time frame here, February 24th. From that low to the high out here at 3 o'clock in the afternoon, that was yesterday. What we'll see here is probably about a 50% retracement. Excuse me, the 0.618 retracement, which would be 36.72. That would take it to the bottom of its rising price channel. That rising price channel is going to be a key area for us to be paying attention to. Now, why is it that I was really paying? Because what the NASDAQ futures have also done now is they've rejected the consolidation. They've broken out. However, have they really done that? That's the real question here. And how are we going to know? Well, certainly we'll know as we watch price. But one thing that we want to focus on now is we want to go from that high that came into 3 o'clock yesterday afternoon. So, again, we're at the price level 37.0150. We're going to go from that high to the low that formed here at 7 o'clock this morning. That was down at 36.7850. What we can see is the first move here, which is to the dead cat bounce, a 0.382 retracement that was attained. So we're going to be really focused. We're going to be laser focused on 36.9271 to see what happens as that area gets hit. Because 36.92, 36.96, those are still areas where the downside objective, the A to B equals CD pattern, could be formed out there. We'll watch the bars and we'll watch the volume as those levels get hit. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pizzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back. Great move yesterday in T-Rex out here. Big volume coming into this equity. Wasn't able to break through the swing point. The swing point here, the B point of the A to B equals CD up. That was the December 24th high out there. 83.04. The volume there, only 61,000 shares. Yesterday, this thing moved into that level with 1.4 million shares. So we'll see if it can continue to motor along here today, break above that B point. We take a look at some things here that are moving in the pre-markets here. You've got Intermune Inc., ITMN. Looks like they received a favorable result from a trial out here. They closed at $13.96. I mean, very favorable. They're trading out at $36.36. So let's go see what Intermune is trading into, ITMN. See if this thing is all over the board or just what it's doing. So the last had a breakdown. Let's take a look at this chart here. It's a daily chart for Intermune. This thing broke down. Looks like maybe they got some bad results maybe from a trial out here that took place on January 31st. I don't know what it was. I just know that there was some major selling going on. 7.5 million shares. Now, the resistance on this thing here, we'll see if it can break through resistance here. Well, it's going to break through resistance. It's trading at $36. Well, how about forget taking a look at resistance? I should have taken a look again at what it was last trading at here. So let's see. This thing's going to be one huge gap to the upside, isn't it? Man, oh man. So $36 is going to this is going to be one huge gap up. Well, assuming that it's going to gap up here, $36. So as much. Let me see if I can read about this here. What this Phase 3 trial here says. Let's see what they're carrying out here. Give me a moment here to try to pull this back. So it says Phase 3 trial assessing pirfenidone in patients with idiopathic pulmonary fibrosis, or IPF, showed that pirfenidone significantly reduced IPF disease progression. A measured by change in percentage, predicted forced vital capacity of... So that's just a lot of gobbledygook. So we won't have to worry too much about the gobbledygook. But the good news is, sounds like they are helping folks that have the IPF disease. So that is a good thing. Now, where is this thing traded into? Let me put this on a weekly chart out here to be a little bit easier for us to pay attention to Intermune. So Intermune, boy, it had a talk about a stock that can go from its highs to its lows quickly. It's a weekly chart back here. Back in 2010, folks, this thing went from $49.46 in 1 week, probably in 1 day, all the way down to $9.75. That's a pretty nasty haircut, isn't it? In this case here today, though, it's going to go from $13.96, trading right now at $36.56. $36.56 is going to take us into the last time that it really broke down. So it's got its last set of swing points at $37.45, July 22nd, but no real volume out there to speak of. So that should not become a resistance level. You wonder how many folks were actually still trapped inside this equity from back in either May of 2010 or, quite frankly, this thing had made it all the way back up to the level here where it broke down. Take a look at this. I'm going back to the May 2010 time frame, and it made it all the way back up to that level which took place here on April 15, 2011. And that is a weekly chart, and that is a lasting engulfing candle session out there. In the following week, it did get the lower close, and then the thing ran all the way back down to the bottom out here. So that's on Intermune, but it's going to have one heck of a nice pop here as we speak this morning. Tesla is trading up this morning as well. They closed at 217 and change. They're trading at 230 right now. LinkedIn closed at 199.59. They are trading out at 206. Vitamin Shop, VSI, taking its vitamin C this morning. It closed at 41.97. They're trading up a nice, almost 10%, looks like, at 45.90. They generated net sales of $17.2 million. Let me see. Yeah, net sales were up 17.2% to $256 million. Net income was up 15.9% to $11 million out there. That is on the Vitamin Shop. Let's go take a look at the Vitamin Shop here. VSI is the ticker symbol. Let's go see what this is going to trade into. So last trade here, firing off at $45. $45 is going to take you right into its most recent swing point here, which just gets you back to February the 11th. That high is $46.05. This did have a nice little sign of strength out here back on November the 5th. Had 5.4 million shares to the upside. A slight breakdown just a couple of trading sessions ago on Valentine's Day, February 14th, down with 1.9 million shares, but it's going to gap up here this morning. Also gapping, looks like, to the downside here this morning, Real Page. They closed at 2072. They're going to open at about 1550. We'll be right back, folks.
Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
To the races. We got the Dow up 23 points, trading out at 16,229. S&P up a full point, trading out at 1840,850. Composite up 6 points at 42.98. Russell 2000 up about $2, trading at 11.76. Apple up 76 cents, trading out at 528.31. Microsoft back 19. Google up about $2. Intermune leading the charge, the upside up 22 bucks. That's up 157%. Good day out there. Tesla Motor up $17, up about 8%. Zolli Inc. ZU is the ticker symbol out here. ZU is up 29%. Let's see what we have going on. Let's see what ZU even is. Zolli is a online flash sale retailer in the United States, Canada, United Kingdom. They provide merchandise, product for moms purchasing for their children. That is Zully's. Can't say I've seen a Zully's store, but there's many stores I have not seen out there. They generated $1.1 billion, it looks like here. Let me see if they've actually got the real number out here. I've got a in-between number. Let me see. How about net sales for the first quarter, $225 million. Boy, talk about the release of numbers not exactly being exact out here. Anyways, let's go take a look at Zully's. Oh, this is not good. NASDAQ is made it up to that 0.618 retracement. NASDAQ futures here. When I say not good for the bulls out there. We take a look here. Remember, one of the issues I was suggesting this morning here, and why we were taking a look at that retracement, is because you had gotten into that consolidation range out here, and what it did was a normal retracement is going to get you back to that 0.618 level. So it's very key to be monitoring the 0.618, the 0.786 levels, especially here, because what that could be doing, what it may be doing, is setting up an A to B equals CD down. Now, this is an intraday time frame here, and it works this way on everything that you trade. That's why you want to monitor those levels out there. The actual 0.618 retracement from the high to the low so far is 36.92.75 basically. And what we've seen here was a high so far got up to 36.92.25. So if this is an A to B equals CD down, the B point on this is going to be that low that came here. This is NASDAQ futures. This is 7 a.m. So we're going to take that low, which is 36.78. We're going to come up to the high that so far we've seen here during this 9:30 to 10 a.m. trading session. And the 1-to-1 would take it to 36.69.21. That would be cracking the old rising price channel out there. So we'll see if, in fact, that occurs. Now, the more dangerous thing is that being inside that consolidation pattern says, you know what, if you can't bust them up, which it did, but it came back inside there, says it will go ahead and try to bust it all the way back down to the bottom of the consolidation box. So let's see how this plays out here. It's still early into the trading session. We've got the battle going on between the bulls and the bears. Where we don't have a battle going on is in Zully's. That's up 31% here. So let's go see what Zully's is trading into here. That is up nice. Let's go see what it is doing. ZU, by the way, is the ticker symbol. So we'll do that in honor of our ZU in the Tiger's Den out here. So this is up nice. Well, this is an IPO. How about this? This is a IPO came into being here back in November. So November 15th, so they're pushing this thing higher. November 15th, 2013, that debut day, 41.32 is the high, 36.36 is the low out here. No real sign that, it would take off like this. But, boy, that is a nice move out here inside of Zully's. It's up with 1.1 million shares out here. It hasn't been, there's not enough data here on the charts to give you much of anything out here inside of Zully's chart. But sorry about that. It is the way that it is, though. Let's take a look at what's moving to the downside here. Leading the charge, jumping into the fray here is Sina Corp, S-I-N-A. It's down 8%. See if I can find out, were they out with numbers? Looks like they are. Revenues were up 42%, 197 million, so that's not too bad. What do they do bottom line? Net income was about 44 million. Doesn't say what it was versus, so sorry about that. In any event, let's go see what this equity here is doing. S-I-N-A, we're going to look at a daily chart for Sina. This thing here gapping down, creating a little bit of an island out here, never a good sign. Let's clean up this stock chart. We'll go back and we can add things to it here. But looks like this had gapped up yesterday. So if we take a look at yesterday's action, the prior day, meaning on Friday, you saw a high of $74.20. Yesterday's low was $74.60. That creates a little bit of a gap there. Today, what's it do? It gaps down. Now, yesterday was also running into a resistance level here. So Sina now looks to be forming a second A to B equals CD down. Second because it looks like the first one here formed and completed. That first one was off of the highs out here. Come on, grab it. There we go. The high that I'm using is the candle session from October 21st, 2013. 92.40, excuse me, was the high. That's your A point. Your B point is the swing down here on November 27th out at 76.51. Looks like it makes a 618 or 786 retracement. A key reversal session is what it also created on that January 9th date. Makes a 1 to 1.272 A to B equals CD down. Told us it was going to do more than a 1 to 1. It was giving us, it was communicating to us, at least the chart pattern was communicating to us that it was going to do that. It in fact did. Now it has made a bit. Now it looks like it's going to go ahead and maybe make its second A to B equals CD down. That would look like this here. Give me a moment. That's going to start off at the, I'm just using the smaller pattern now. That's the January 9th high, 89.79, down to the low. Looks like that low came in here February 3rd out at 62.85, 3 million shares there, and yesterday's high was the C point. That says 51.54 is the projected target. That makes a whole lot of sense out there because what that would do is take you, right smack dab into its last significant sign of strength out here. That took place between April 26th and April 29th out there, and that had a nice breakout that was with 16 million shares. If it can come back into there, if it can complete this A to B equals CD to the downside, it's got a ways to go, obviously, before. First, it's got to get to the swing point, the top of which is 64.09, 3 million shares. So it's going to come in there with volume, or it's moving down towards that level with volume, is what I should say. You've already done 1.8 million shares. But it would be nice if it could actually pass the B point, do it on lighter volume, get down to 51.56, and that might actually be a buying opportunity, and that is inside Sina. S-I-N-A is the ticker symbol. Let's go take a look here at, let's see, what else we got here. Just looking at things. Let's go take a look at LinkedIn. Let's kind of jump around here. We'll go from something moving to the upside, something moving to the downside. LNKD is the ticker symbol. That is moving to the upside, gapping up. We can see, so LinkedIn here, this is a chart. I haven't looked at this for a while, but the chart patterns here obviously were drawn a while back. Let me get rid of the moving averages for the moment. We can always add those back in. Those are the 50 and the 200-day exponential moving averages. Let me go ahead and get rid of this volume bar out here for the moment. What we can see here with regard to LinkedIn, it has clearly formed a nice little descending price channel. So it looks like price inside LinkedIn is going to try to make its way back up to the top of the descending price channel out there. As far as a price perspective, if we were to hit that level today, it would be in about the 220-ish range, be it just a tad lower if it tries to do it tomorrow and so forth. But price here inside of LinkedIn. If you're inside LinkedIn, let's say you happen to be in LinkedIn from a long position standpoint, you want to see this thing break through this descending price channel out here. Because if you don't, what it's going to do, it's going to make its way back down to the bottom of that descending price channel. It's been making this pattern here really ever since the time frame. You'd have to say it's been making it all the way back from August of 2013 when that descending price channel began, and that is inside of LinkedIn. Let's go take a look at Rosetta Stone. ROSE is the ticker symbol. Nothing like a rose out here. Let's go see what Rosetta Stone, though, is doing, because it's not a rose other than its ticker symbol, and it's moving lower. It's got some good volume in this. This thing, talk about being in a descending price channel. That certainly is the case here for Rosetta Stone. Big, huge shooting star candle. That was October the 30th out there. The high gets to 65.30. You're trading at 42.45 right now. I can see it's also broken some hammer candles along the way, high volume. Hammerish type candle on December the 19th. That low is 45.26. So what is Rosetta Stone here doing right now? Well, the volume at the swing point from February 5th is only 1.9 million shares. Today you've done 614,000 shares in only 14 minutes of trading. So that does not bode well for Rosetta Stone out here. Let's go see where this thing is headed to. It's this high volume bar. High volume bar down here at the lows. So that's where it's really trading into, in essence, right now. That's not good. So if it does not, if it breaks through this swing point, it continues with the downtrend here. Rosetta Stone ought to come all the way back to a price level approximately $32 or so, and change another $10 to the downside. That would be a little stinger out there. We have not taken a look at commodities. We'll come back and take a look at some of these stocks here, moving and grooving. But let's go take a look at the commodity sector out here. Let's go start off by taking a look at Goldilocks. Gold right now is trading off about $1, so no big deal out here at $13.37. Really been kind of just it's fought through the 50-day exponential moving average line. That's the black squiggly line on my screen out here. We'll see if now where that has acted as a resistance. And when I mean resistance, folks, we haven't seen gold above the 50-day exponential moving average since, well, last time was in January of 2013, so a little over a year ago out there. It is now back above it. That is a bullish sign out here. We'll see if that actually continues to act as a support level, and that being right now about the 1330-ish level. Thus far, it's been tested. Thus far, it's been rejected, meaning it's held as support out here. The next level up for Goldilocks. No bearish candles out here, no reversal signs, just simply in a nice, strong, overbought condition out here. 1361 would be the next target. And I'd say as long as the 50-day exponential moving average holds, that seems like a doable and a logical spot for Goldilocks to trade up to. Let's take a look at silver here, struggling a bit compared to gold. That is back 20 cents right now, off about 1%, trading out at $21.84. This is the happens to be a green line now that we're looking at on my chart, and that is also the 50-day exponential moving average. Unlike gold, that now it has acted as support only one day, but nonetheless, it's been resistant still for silver. However, silver, nice little consolidation pattern at the highs out here. So that is that's pretty nice. That's what you want to see in any kind of a consolidation out here. Any kind of consolidation, you want to see it just move sideways. That's very strong. That's very bullish when in fact that can take place. If it breaks through the 50-day, 2267 would be its next run. That is your 0.618 retracement. That also gets you back up in 618 retracement coming off of the August 28th high out here. That would get you back into the 100% move of a move, get you back into the October swing point. So a nice little bullish configuration here that we are seeing inside of silver. If we take a look at light sweet crude here at the moment, light sweet crude flickering with the rising price channel. We can see here, we showed this yesterday, and right now you've got light sweet crude trading out at 101.32 out here, and it's trading right into the rising price channel. A clear break of this level here, and that sets up the move to the downside, and I don't suspect a move to the downside. I suspect a colossal move to the downside if, in fact, light sweet crude is getting ready to crack. And if it gets ready to crack this little rising price channel. Not there yet, but it is. It's up against what should be good support. And if that support can't hold, that should be a fairly large message out there. If we take a look at the 30-year Treasury here right now, 30-year Treasury still continuing to move sideways. That says until the high of 133.29. That's your February 19th high is taken out. The 30-year Treasury can still move down to about the 130.27 level, where it would form a 0.618-ish Gartley buy pattern. We'll see if that pattern pans out for us. At this stage here, I would just be flat when it comes to the U.S. Treasuries. If we take a look at natural gas here, let's see what we got. The J contract, so we've got April up here on my screen. We can see big, huge key reversal session, bearish engulfing yesterday. We haven't seen that kind of a candle inside of natural gas here in a long time. Well, I can't take the June contract or the April contract back that far, but that's a big reversal pattern inside of natural gas out here. So you got now very stiff resistance at the 520 level. That is on the April contract out here. Let's take a look at let me see the March contract here. Also big key reversal, big bearish engulfing candle. Follow through today. Let's see, where can this easily pull back to? Give me a moment here. Let me see what we've got here. I've got some additional data. Let's put up the retracements. Give me a moment. I just want to measure. That didn't help me a lot. What we can say is as it was making its high yesterday, it was making a expansion. It was making a Fibonacci expansion of the swing point high from February 5th down to the low out here that took place on February 10th. So made that pretty much Johnny on the spot. $6.46 was the move up there. So you've gotten big reversal signals here inside of natural gas on the daily charts. Let me put up the weekly here. That does not bode well. Weekly chart just giving you a big, huge reversal session out here. 877-927-6648. Be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It is always better when we're together, folks. Welcome back. It's the ES Mini here that we want to, looks like that's going to be where we get the first real notification here. We would get the memo with regard to what the market here wants to do. That is the one that is closest right now to its little rising price channel. We can see that price here getting very close to attacking that level. If, in fact, that breaks, what we will see here on the 30-minute basis, if we see a break of that rising price channel, great signal here that we will see price move back down to the bottom of the consolidation. Now, if it breaks the bottom of the consolidation, you got the same thing going on, just like that 26-point move. And, you know, one could argue that we may have come very close yesterday to making that measured move of the consolidation area, because it could be just a little bit tighter than the 26-point consolidation level. So this is the ES Mini as we come into this 10 a.m. session over the next 4.5 minutes or so out here. You got the ES Mini trading right up against a significant area. Now, the A to B equals CD to the downside here, just to show you what that would look like. That A to B equals CD to the downside here says, let me move this 26-point consolidation right over here. I would say the way that it's coming off of this C point, really what it would signal to me is all the way back down to the bottom of the consolidation. You could say it may find some support around 1827 to 1822, but the way that these consolidation patterns here work is, if you can't, it would actually say yesterday would be a false break topside because that consolidation pattern should have held. But we still got time. The Bulls know what they're looking at here. I'm sure they're looking at the same. I'm sure they're listening in on here at TFNN, just like you as well. So they know where the mark has been drawn in the sand out here. And we'll see if this price level holds or whether it fails. Now, it was the ES Mini I said we should be paying attention to, but the NASDAQ futures also punched down. Well, it looks like they all have. So simultaneously, we all got down to the bottom of the rising price channels out here. The lower left quadrant, I'll go ahead and shrink that up a bit. That's the NASDAQ, so we can see that price running right down into that level. And inside the Dow out here, let me get rid of the retracement level. You can see price also running right down into the bottom of that as well. So makes it really easy to follow along here. We have seen as well, we've seen a little bit of a move here now inside of the Euro-Japanese yen on a 30-minute chart, but I'm not so much paying attention to that as we speak here right now. Not that I don't pay attention to that currency pair, but it's really been also just simply consolidating sideways. The larger pattern on the daily has not given us any kind of signal that it wants to move south, at least not just as of yet. So right now, as we speak, you can see that those areas of the rising price channels, the House of the Rising Sun. Who did that song out there? Who did that song? God, why is that name? Why is the band House of the Rising Sun. Somebody knows that. In any event out here, we're watching the House of the Rising Price Channel. That's right, Eric Burden and the Animals. Very good. Eric Burden's and the Animals. There we go. That was our man Alberto. Can't get anything past him out here. So we know what we're paying attention to, at least for the rest of the day. We're going to be paying attention to the these areas here inside of the 30-minute futures charts, just to give us an idea. Let's go take a look at the VIX index. We've got another 20 minutes or 20 seconds or so. VIX index, see where that is traveling to. It's traveling a little bit higher here this morning. The 50-day exponential moving average, that is priced out at 1488. You see it close above that today, and that says, guess what? The bulls will have lost the upper hand, as the VIX can do some damage when it gets above that 50-day exponential moving average. Folks, if you're off to start your Tuesday, have a terrific day. And thanks so much for starting your day off with us here at TFNN.com. Have a great Tuesday, folks. Look forward to seeing you soon. Bye-bye now.
Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.